Hi there, future investors, and welcome back to the channel. I've got some exciting news to share with you today. I'm thrilled to announce a brand new collaboration with someone who's making waves in the investing world, my good friend Ashton from Ashton Invest. For those of you who aren't familiar with him yet, he's a great investor with a sharp eye for spotting trends and uncovering opportunities in the market. Whether you're a seasoned pro or just getting started, Ashton's insights can really help you level up your investing game. You can check out more of his amazing work over on his X profile at Ashton_1Invests. So, what does this collaboration mean for you? Well, we'll be joining forces to bring you even more valuable content. I will be taking Ashton's deep analysis where he dives into some of our favorite specific stocks and transform it into a comprehensive video, adding some bits and pieces of complementary information so that you can have the best experience possible while watching. We're committed to giving you the tools and knowledge to make informed decisions in your investment journey. We've got a lot of exciting content planned, so make sure you're subscribed and hit that notification bell so you never miss an update. Also remember, none of this is legal or financial advice. Watch for entertainment purposes only. Okay, let's get right into it. Today we'll be covering Fubo stock. FuboTV is an American streaming television service based in Midtown Manhattan, serving customers in the United States, Canada, and Spain. In an increasingly crowded streaming market, FuboTV has carved out a unique position as a sports-first platform, attracting a dedicated audience of sports enthusiasts. Launched on January 1, 2015, as a soccer streaming service, Fubo changed to an all-sports service in 2017, and then to a virtual multi-channel video programming distributor, or vMVPD model. As a vMVPD, Fubo still markets itself as a sports-first service, but it has since expanded its programming to include channels that fall under other genres, including ones with reality shows, premium movies, and cable news. As the company continues to expand its offerings and innovate with new features, it is becoming an attractive investment opportunity. With a growing subscriber base, strong revenue potential, and a recent legal victory against some of the biggest names in media, FuboTV is positioning itself as a key player in the streaming and sports betting industries. This analysis explores why FuboTV could be a great stock to buy and hold for long-term growth. Let's take a look at some highlights you should be aware of. First up, niche market dominance in sports streaming. FuboTV distinguishes itself from other streaming platforms by focusing exclusively on live sports content. This unique value proposition has enabled the company to attract a loyal and growing subscriber base of sports enthusiasts, making it a formidable player in the streaming industry. Next is consistent subscriber growth. The trend of cord cutting has fueled FuboTV's steady increase in subscribers. As more consumers abandon traditional cable TV in favor of streaming, FuboTV's specialized offerings and improved user experience are likely to continue driving subscriber growth. Just take a look at this historical data on Fubo's subscriber growth. Number 3 of this list is the expansion of content and features. FuboTV has consistently expanded its content library and added new sports packages, making it an even more appealing platform for sports fans. The integration of advanced features like interactive betting is expected to further enhance user engagement and create new revenue streams. These streams will be critical to the company as it reaches profitability so that it can be sustainable for the long run. Add to that a strong revenue growth trajectory. Let's take a look at the trend here. FuboTV's revenue has been on the rise, driven by its expanding subscriber base and advertising revenue. Also, the more new projects and partnerships they make, the more users will subscribe to the platform, boosting revenue even higher. The company's ability to increase its average revenue per user through additional services and advertising opportunities bodes well for its long-term financial health. On a technological side of things, we need to address Fubo's innovative AI-driven features. First off, Fubo has had a tech-oriented approach since its early days. Fubo built its tech stack internally and, in 2017, launched features like cloud DVR storage, pausing and unpausing live streams and look back of previously aired content for 72 hours, several simultaneous streams, and much more. Recently, the company is leveraging artificial intelligence to deliver personalized highlights and recordings, making the viewing experience more engaging and tailored to individual preferences. This AI integration sets FuboTV apart from competitors and adds significant value for users. As to the stock, right now I can see an attractive valuation for growth investors. Despite its growth potential, FuboTV remains a small-cap stock with a relatively low valuation. With a market cap under $600 million, this can be interesting for investors seeking high-growth opportunities in the streaming and sports betting sectors. If there are no legal problems ahead, Fubo offers quite a compelling investment at its current price. Analysts are rating the company quite positively, and the upside seems to be growing every day. Although Fubo is still not profitable yet, the management team is currently obsessed to reach profitability in 2025. They have a clear strategy to do just that, and as of now, the plan seems to be working just fine. Also consider that as interest rates drop, small-cap speculative stocks usually benefit. All major indices have ran up in the past 2 years. However, the Russell 2000 has yet to make its run, and this may be a great opportunity as monetary policy is about to change in the short term. So hopefully there's some brighter times ahead. Also, let's talk about some critical strengths that the company has. High user engagement, customer loyalty, and audience attention. FuboTV's focus on live sports ensures that its users are highly engaged and loyal. Sports fans tend to spend more time on the platform compared to general entertainment viewers, resulting in lower churn rates and higher lifetime value per customer. Also, the attention rate hits the top grade in comparison with competition, which will be a tailwind for future revenues from advertising. Something I find very important moving forward is the number of partnerships the company has. On top of that, the ability of the company to get new collaborations and partnerships towards the future without depending on the industry's giants will be instrumental for long-term success. Recently, they teamed up with Bare Knuckle Fighting Championship, better known as BKFC, to bring live bare knuckle fighting to a broader audience. BKFC has been gaining popularity as an alternative to traditional boxing and MMA, offering raw and unfiltered combat action. At the helm of this partnership is FuboTV's CEO, David Gandler. Known for his strategic vision in sports streaming, Gandler sees this deal as a natural fit for Fubo's audience. By adding BKFC to their lineup, Fubo not only diversifies its sports offerings, but also taps into a growing fan base that's hungry for the next big thing in combat sports. But that's not all. The partnership is getting an extra punch of star power from none other than the infamous Conor McGregor. The UFC superstar has been a vocal supporter of BKFC and is rumored to be involved in promoting the sport even further. While McGregor isn't stepping into the ring himself, at least not yet, his involvement could attract a huge audience of MMA and combat sports fans to Fubo's platform. McGregor's influence in the fight world is undeniable, and his association with BKFC could be just what it needs to break into the mainstream. Last but not the least, we have to address the lawsuit. In February 2024, FuboTV filed an antitrust lawsuit against the Walt Disney Company, Fox Corporation, and Warner Brothers over their recent announcement of a streaming sports joint venture named Venu. The streaming joint venture said it would develop a sports-focused streaming service, which was seen as potentially drawing customers away from Fubo. After filing its antitrust lawsuit, Fubo launched a website called Save My Sports as part of an outreach effort to rally public support for the lawsuit against the three broadcasters. Recently, Fubo reached an extraordinary legal victory against those industry giants. They won a critical legal battle by securing a preliminary injunction against the JV as the court ruling halted the launch of Venu, scheduled for September 2024. They won the first battle. Now they're up to win the sports streaming war. YouTube TV took advantage of all this noise to offer customers with a solid promotion for new subscriber until the end of August. War is tough, right? Okay, let's recap. So far, we've covered all of the strengths, opportunities, and positive perspectives of the company. However, in this channel, we like to provide you with both the bull and bear cases so that you can take wiser decisions when analyzing your favorite stocks. So, let's talk about Fubo's weaknesses, threats, and risks. One of the most apparent risks with Fubo stock is its high volatility. Since its IPO, Fubo has experienced significant price swings. For instance, after reaching highs of $62 per share during the trading session of the 22nd of December 2020, since then, and more recently, it plummeted to almost $1 per share. Such volatility can be nerve-wracking for investors, particularly those who are risk-averse or investing for the short term and need the capital available. Next up is competition. Starting with the streaming industry, Fubo is up against some of the biggest names in entertainment. Think about it. Companies like Netflix, Disney+, YouTube TV, Amazon Prime Video, and Hulu have massive content libraries, brand recognition, and billions in resources to spend on content and technology. These platforms also offer a broad range of content, from movies and series to documentaries, which makes them one-stop shops for entertainment. Fubo, on the other hand, is more niche, focusing primarily on live sports and news. While this focus is a unique selling point, it also limits Fubo's audience compared to these all-encompassing giants. Another factor to consider is Fubo's financial health. The company is still in a growth phase, which means it's not yet profitable. While revenue has been increasing, Fubo has consistently reported net losses, which could be a red flag for some investors. Lastly, there's the risk associated with user growth and churn. While Fubo has been growing its subscriber base, it operates in a sector where customer loyalty can be fickle. Moreover, when competition is just so strong and agile, high churn rates, where users cancel their subscriptions, could undermine the company's growth strategy, so customer satisfaction is key. Keeping subscribers engaged, continuing to innovate, expanding to other markets, and increasing strategic partnerships may be the only way to go from here. So there you have it, folks. A comprehensive SWOT analysis on Fubo. Fubo presents a compelling buy-and-hold investment opportunity for those who believe in the long-term potential of sports streaming and integrated sports betting. With its strong niche focus, innovative features, and recent legal victory, the company is well-positioned for growth, and buying the dip on this one may become a generational play. As long as management keeps executing towards profitability, the lawsuit and similar initiatives are managed successfully, and users keep embracing its disruptive technology. However, investors should carefully consider the risks and conduct thorough research before making a decision. Don't forget, it is still a speculative stock, one that can make you lose all your money or change your life forever. If you like this content, please just leave us a thumbs up and subscribe to the channel for more episodes in the near future. Thanks for watching. And as always, stay sharp, stay ahead, and I'll see you back in a bright future.